All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Friday, everybody. Another fast week, wasn't it? Today is August 29th, 2025. And our top stories this morning, they both affect the trade war once again, starting with our neighbors to the north, Arctic Mexico, otherwise known as Canada. They posted their GDP report today, and, well, it kind of sucked. GDP, or gross domestic product, in Canada fell by 0.4% in the most recent quarter. That is a 1.6% annualized decline. So what is going on in Canada, guys? It's the trade war. Any way you look at it, this is U.S. tariffs are kicking their butts. We got exports fell 27% in Canada. Imports fell by 5.1%. And right there, you can see Canada really never had any leverage to begin with. You know, we were talking all about how the Canadians are targeting whiskey and they're targeting American wineries. And okay, it's great. Those are industries that Canada is capable of inflicting some pain on. But compared to the amount of stuff the United States imported from Canada, it was just never going to be even close. And you can see a 5% decline in import. That's Canada buying less from the United States, while the U.S. cuts their exports by more than a quarter. Canada is just getting their butt kicked in the trade war. Look, it was never really about the kind of pain that the Canadians can inflict on the United States in retaliation for the tariffs. That was never like the hard part for the U.S. in the trade war. The real pain for the U.S. is going to be, what can the American consumer absorb? The American consumer is already in bad shape. And so that's really, that's the hard part of the trade war, not the Canadians targeting American whiskey. By the way, it's kind of funny. There was a story in Bloomberg today about private credit is loaning money to distillers and wineries who are hurting because of the Canadian retaliations. But they're extending this private credit and they're using barrels of whiskey as collateral. And it's all fun and games until somebody goes on a bender and drinks all the collateral. And then what? It wasn't me, I swear. But look, also business investment in Canada declined by 10.1%. So, you're seeing companies are batting down the hatches. They're spending less on R&D, less on investment in the business. It's really hurting Canada here. And it's not surprising then in this context, that story we saw earlier this week, where Canada preemptively lowered tariffs on a lot of U.S. goods in order to get the U.S. back to the table. Somebody over there in the Carney administration got a look at those GDP numbers and said, crap, we better do something about this quick before Canada slides into a recession, which it looks like they're probably going to do. Now, we also got big news out of China this morning, two different stories that show the Chinese are taking this AI race and investments in R&D very seriously. And again, this all has to do with the trade war in the U.S. targeting China for no chips exports and chip manufacturing equipments. The first story we had was Alibaba. Their stock is surging this morning on news that they have a new chip that is being tested. This chip is going to be used for inferencing, which that's as opposed to training large language models. Inferencing is kind of like the production end of things. Once the model is trained and you're running it, that's for inferencing. Alibaba has a new chip that is coming out for that. They are still chasing NVIDIA. NVIDIA is still the best in the world by a pretty comfortable margin, but it does show that moat is starting to shrink a little bit. By the way, NVIDIA stock is down a little bit on this news. That's interesting. Why is NVIDIA stock down on the news of a new Chinese chip when NVIDIA just told us they don't sell any chips to China? Oh, that's right. We all know they have a huge illegal market selling chips into China. One eye open, one eye closed, turning a blind eye to this huge black market. But it is kind of funny. NVIDIA stock is down more on news of a chip in a market they're not allowed to sell to than they were yesterday on news that they missed on their data center revenue. A little bit ironic. But also going on in China from this AI perspective is this story from Huawei this morning. Huawei reported earnings and their profit is down big, 32% decline in profit for Huawei. But that's not actually terrible news for Huawei, because the reason for that is a huge surge in spending on research and development. In other words, Huawei is trying to make their own chips in order to displace NVIDIA as well. You can see this, guys. The Chinese are lining up behind their tech firms in order to try to win this AI race with NVIDIA. All the while, NVIDIA goes and spends $1 million on dinners with President Trump at Mar-a-Lago and lobbies the heck out of President Trump to try to get them to allow them to sell their chips into the Chinese market, which so far hasn't borne a lot of fruit. And we've got another story out this morning. Shout out to my moderator, Mish, who caught this one right before we went live. The federal government is saying several firms, SK Hynix, another one, and Intel, no longer allowed to sell chip-making equipment into the Chinese market. It's kind of interesting. The government takes a stake in Intel and then a few days later tells Intel you can't sell certain stuff to the Chinese. Maybe the whole thing, like making a deal with the devil, getting in bed with the government. Maybe there's a downside. I don't know. But again, more shots fired in this AI race and this trade war with the Chinese this morning. We also got some pretty hilarious and at the same time rather scary developments going on at the Federal Reserve. The first thing is Lisa Cook's lawyers. First, she's suing President Trump to block her firing. But at the same time, her lawyers are now telling us that it was a clerical error. Oh, sorry, I checked the wrong box or I signed in the wrong place when I committed mortgage fraud on 2 mortgages within 2 weeks of each other. Oh, sorry, no criminal intent. I didn't mean to break the law. Sorry. In other words, she did it. Whether, she's not arguing that she didn't do it. She's arguing no criminal intent. Ignorance of the law, especially when you're a Federal Reserve governor. I don't know, Lisa. That's a bold move, Cotton. Let's see how it plays out for her. Also, the clerical error. Apparently, she made many clerical errors because we have had yet another criminal referral against Lisa Cook, this time over a third mortgage, a condo in New England that she bought. And she claimed it was going to be a second home, i.e. it was not an investment. It was a for her personal use. And then 8 months later, she claimed rental income on that same property. So it was actually an investment property. And look, mortgage lenders charge higher interest rates for investment properties. In other words, she lied for financial gain on a loan document. Yup, that's a felony. That's fraud, all right. So did it again, apparently. Now, the question here, where's this information coming from? This is a valid point. Again, I don't doubt that she committed this fraud. I don't doubt it at all. And she shouldn't be above the law. But again, this is not about stopping fraud. All right. If this was about stopping fraud, guys, our courts would be backed up for freaking centuries with the amount of fraud that's going on in this world today. This is about convincing the Federal Reserve to lower rates. This is about stacking the Fed with sycophants. Where did Bill Pulte, the head of the FHFA, where did he get the documentation showing that Lisa Cook had rental income 8 months later? Was it on some kind of financial disclosure forms at the Federal Reserve? Okay, maybe. Or did he somehow go digging into the tax records of his political rivals looking for dirt? Not allowed to do that. So there are plenty of ethical gray areas here that we're talking about. Yet another step down this slippery slope of lawfare. Do you think maybe the guys on the other side are starting to yet regret the 2 impeachments, the 34 felonies, the raiding of the home, and we'll throw in the 2 failed assassination attempts? Maybe now can we all agree that lawfare was a stupid idea? We never should have gone down this path to begin with. Just throw it out there. Where does it stop? Nobody knows now. Also, we got some earnings this morning. We got earnings from Affirm, who is now profitable. They swung to a profit. Big gains for Affirm there, but still that company just does not pass the sniff test. Wait till you see what they're claiming on their delinquency numbers, which has never sat right with me. We also got earnings from Marvell and Dell, some of the lesser chip makers. Both of them reported impressive numbers that disappointed investors who had some very lofty expectations, something we're probably going to be seeing a lot of in subsequent quarters. We got the Indian rupee is falling to an all-time low. Seems the trade war is taking a chunk out of the Indian currency as well. Now, that's important, guys, because remember, the Russians have been buying their oil with Indian rupees. And so the Russians are sitting on a massive pile of Indian rupees right now, which are losing value quite rapidly. And, this whole thing about convincing the Indians to stop buying Russian oil in order to put pressure on the Russians to stop the war in Ukraine. Well, the collapsing currency over in India could play a role in that. And it could also play a role. A shout out to my BRICS guys out there. I get messages almost on a daily basis about the next story about the BRICS currency. Could this be one more thing that pushes the BRICS countries to come up with their own currency to rival the dollar? Or is this just another quiver in Brent Johnson's cap that says they just can't do it? Having your own reserve currency sounds great until you go to do it and you realize it's really, really hard. We also got some economic data came out. PCE inflation, the Fed's preferred measure of inflation, came out today. That's personal consumption expenditures. And the big story there is there's no story. It was largely flat and in line with expectations. So that neither helps nor hurts the case for rate cuts. We're kind of right where we were before this data even came out. Some interesting notes, though, that came out along with this data. Personal spending up by 0.5%, while personal income rose by just 0.4%, which means consumption growth in America continues to be fueled by credit expansion, more debt. See also those affirm earnings. And the trade deficit came in at $104 billion in July. The U.S. continues to import much more than we export, but still at a level much lower than we were a few months ago. See also earlier comments about the trade war. Guys, there's a lot to talk about this morning. Let's shrink my big melon of a head and see what's going on in this market today. Hey, don't forget that like button for the YouTube algorithm and that subscribe button so you can come on back tomorrow and have your coffee with the melon heads, because we do this one every single day. And right now, the S&P 500 is down a modest 13 points or 0.2% in the red this morning. We had a little bit of a bump up here. That was that PCE data coming in line with expectations. It looks like some people were buying on that news, but not very much. Looking over at the Dow, we are currently down 90 points or 0.2%, although we do have a little bit of dip buying going on as well in the Dow. And the NASDAQ is down 99 points or 0.42% ahead of the opening bell. So we got all three indexes are in the red this morning. And we have a slightly stronger dollar, also 98.09. That is higher by 23 basis points, about 0.25%. That's going to put some downward pressure on assets this morning. Looking over at the bond market, we've got yields are going higher as well. The 30-year Treasury is up by 4 basis points at 4.912. The 10-year yield is at 4.230. That's higher by 2 points and change. The 2-year is at 3.639, up by about a half a point. And the 1 month is higher by almost 1 point at 4.321. Looking over at the commodities board, we've got gold is a little bit higher here, up by $2, $3,419 for gold. It was down big earlier today on that stronger dollar possibly. Looks like that PCE inflation, you got a little bit of gold buying going on after that. Silver came out down about 5 cents here, $39 even for silver. That's off by about 0.13%, but it was down about 25 cents earlier this morning. Again, a little bit of buying in metals since that PCE inflation number came out. But either way, I like the shiny. We've got copper is higher by about 0.9%. Platinum is higher by about a little less than 0.5%. Palladium is Palladium is down 0.9%. And crude oil off by about 1/3%, $64.35 for October WTI futures. Looking over at Bitcoin, having another bad morning here, $110,545 as priced on Coinbase. That's down about $2,000 from where we were yesterday. And we hit lows overnight of 109,400. So Bitcoin is still under selling pressure. We did have a couple of days of dip buying in there. We went as low as 108,000, and then we went as high as 113 and change. Now the sell-off has resumed on very little news, by the way. And which brings us to our main story this morning. Canada's economy shrinks in the second quarter as exports are crushed. Look, there's no way to sugarcoat this guy. Canada is losing the trade war. Now, let me just preface this by saying nobody wins a trade war. A trade war is a war of economic attrition, but Canada is attritioning faster than the United States is. Again, we'll see what happens when the pain arrives for the consumer. That hasn't gotten here yet, but it is coming. We don't know how much of that pain will be borne by consumers versus the companies importing the stuff. But for now, the Canadians are feeling it already. The Canadian economy contracted for the first time in nearly 2 years as the trade war with the U.S. pinched exports and business investment. Canada's GDP shrank at a 1.6% annualized pace in the second quarter. Statistics Canada reported Friday from Ottawa. That number's a little bit misleading. It shrank at a 1.6% annualized pace. It was down 0.4% quarter over quarter. All right, so yes, that's a decline, and it's kind of a big one. And at an annualized rate, does look somewhat alarming at 1.6%. But they're making the number seem a little bit worse than it really was there. That's the biggest decline since the COVID-19 pandemic and the first contraction in nearly 2 years. While roughly in line with the Bank of Canada's forecast, it's a worse print than expected in a Bloomberg survey of economists, which had forecast a 0.7% decline. Exports fell by 27% on an annualized basis as U.S. tariffs on Canadian goods shattered the country's shipments abroad. That more than reversed a temporary first quarter boost in trade activity that was driven by shippers trying to front-run President Trump's tariff barrage. Imports declined by 5.1%. And again, guys, you can look at that like a scoreboard. Imports declined by 5.1%. That's Canada buying less from America, but their exports fell by 27%. That's America buying less from Canada. Again, I hate to phrase it like who's winning because nobody wins here, but Canada is losing more. That's the best way to put it. The Canadians are losing more than the Americans are losing. Nobody's winning anything here, guys. Business investment contracted 10.1% after rising just 1.1% in the first quarter, highlighting the mounting pessimism facing Canadian firms as they contend with the uncertain and constant changes to U.S. levies and policy. Guys, this is why the Canadians abruptly pulled those tariffs earlier this week. Somebody got an early look at that GDP data. The data captured the severe damage inflicted by the trade war, which started earlier in 2025 as Trump threatened and then imposed tariffs on imports of many Canadian products, including on steel, aluminum, autos, and other goods. Let's not forget lumber while we're at it. The U.S. is Canada's largest trading partner. So the Canadians are taking the hit this morning, and the Chinese are investing in their own chips. Starting with this one, Alibaba creates AI chip to help China fill the NVIDIA void. This one just broke in the Wall Street Journal this morning. Chinese chip companies and artificial intelligence developers are building up their arsenal of homegrown technology backed by a government determined to win the AI race with the U.S. The latest example, China's biggest cloud computing company, Alibaba, has developed a new chip that is more versatile than its other chips. Alibaba was long one of the biggest customers of American AI chip leader NVIDIA. Now it and other chip designers are filling the void left after NVIDIA ran into regulatory barriers to selling its products in China. Industry insiders say China remains far from being able to make chips that can rival the most advanced American products, which Washington bars from China importing. Chinese factories are hobbled by U.S. restrictions on access to cutting-edge chip-making technology. Still, companies are coming up with substitutes for NVIDIA's H20 chip, the most powerful AI processor that it's allowed to sell to China. President Trump allowed in July NVIDIA to resume H20 exports to China, but soon after, Beijing told companies not to buy the chips from now, citing potential security risks that NVIDIA says doesn't exist. NVIDIA says a lot of things. Alibaba said Friday that cloud revenue grew 26% in April to June quarter on the back of surging demand for AI services. CEO Eddie Wu has said AI plus cloud is one of Alibaba's two engines of growth alongside e-commerce, which e-commerce is not going to be growing, not after the U.S. got rid of the de minimis exemption. But in February, Alibaba said it would invest at least $53 billion over the next 3 years in the area. It also has one of the world's highest rated AI models called Qwen. The rapid adoption of AI across China's economy is creating a big demand for inference. When AI programs tap their training to deliver outputs such as a smartphone voice assistant's answers, inference typically doesn't require the most advanced chips. Previous cloud computing chips developed by Alibaba have mostly been designed for specific applications. The new chip, now in testing, is meant to serve a broader range of AI inference tasks, said people familiar with it. The chip is manufactured by a Chinese company, they said, in contrast to an earlier Alibaba AI processor that was fabricated by Taiwan Semiconductor. Washington has blocked TSMC from manufacturing AI chips for China that use leading edge technology. So you see the Chinese are also kind of doing what the U.S. is doing, trying to onshore their own chip making abilities. I think they'll probably have more luck than the U.S. is. But a lot of investment going on here. Alibaba stock is ripping this morning. Look at this. This is U.S. ADRs up 7.5% here, trading at $128.60 ahead of the opening bell. Stock in Alibaba is ripping. Now, look, NVIDIA is down by 1% on this news. This should not affect NVIDIA because they're not selling any chips to China, right? Wink, wink, hint, hint. Why is NVIDIA down 1% on news of this Alibaba story when they were only down 0.8% yesterday on missing data center revenue? It's almost like sales to China are very important to NVIDIA's bottom line, even though they're claiming it's not happening. Isn't that amazing? See also $10.1 billion of sales to, air quotes, Singapore in the most recent quarter that NVIDIA reported. Huawei's first half profit plunges on heavy R&D spending. This is another example of the Chinese doubling down on building their own chips, this time from Huawei this morning. Chinese tech giant Huawei reported a 32% drop in first half net profit on Friday as it continued to spend heavily on research and development to offset the impact of U.S. sanctions. Net profit for January to June dropped 32% year over year to 37 billion yuan. That's about $5.17 billion, the company reported. But revenue rose 4% to 427 billion yuan, its highest first half revenue since 2020. That's before Huawei was blacklisted. It spent 96.9 billion yuan on research and development in January to June, up from 88.9 billion yuan in the first 6 months of last year. Huawei has faced a blanket U.S. ban on access to advanced chips since 2020 and has made heavy investments in chips and chip-making equipment to counter that. So you got two big Chinese tech giants spending heavily to try to catch up to NVIDIA in the AI arms race this morning. And shout out to my moderator, Mish, who sent me this one just moments before we went live. U.S. to revoke authorizations for Intel, SK Hynix, and Samsung to receive American chip-making equipment in China unless they obtain licenses. So this is further trying to limit China's ability to develop its own domestic chip industry. And of note here in this story is that they are revoking the authorizations for Intel. That's the company that the federal government just took a 10% stake in, further trying to isolate China from the best chip-making technology. This one is from Walter Bloomberg, who's basically just a parrot for a Bloomberg terminal. So this story just broke a few minutes ago. Now, let's talk about what's going on at the Fed this morning. Cook signals a clerical error may be behind the mortgage dispute. In other words, she's not disputing that she put incorrect information on her mortgage application to benefit financially, probably rather immensely. But she's saying, I didn't do it on purpose. Federal Reserve Governor Lisa Cook's lawyers suggested that an unintentional clerical error may have been behind the mortgage dispute over which President Donald Trump wants her fired. Cook sued Thursday to block Trump's illegal attempt, saying he's using a phony pretext that doesn't amount to sufficient cause to remove her from the U.S. central bank. Felony fraud is a cause. I think it's worth pointing out this is just an allegation, guys. She hasn't even been charged yet. That's an important detail. I'm kind of surprised she hasn't been charged yet. In court papers, her lawyers laid out for the first time a potential defense to allegations that she fraudulently listed homes in Michigan and Georgia as a primary residence when she obtained mortgages in 2021. Trump's director of Federal Housing Finance Agency, Bill Pulte, claims she made that declaration to secure more favorable loan terms and has referred the matter to prosecutors. Cook's lawyers offered an explanation to blunt the fraudulent intent that Trump and Pulte have ascribed to her over the past week. They suggested that if there were errors, she didn't mean to deceive anyone and no one was harmed. That is a BS statement right there, a standard known as materiality. No one was harmed. She received favorable interest rates on a loan. That harms the lender. If you lie and get a loan at a lower interest rate because of that lie, you have harmed that lender. Even if I shed no tears for the banks and for the lenders, that's still a clerical error resulting in financial gain for her and loss for somebody else, otherwise known as fraud. The potential that Cook mislabeled a home's purpose on a mortgage application well before her board appointment without any allegation of its intentionality or materiality would not be the type of offense that would constitute cause for her removal, Cook's lawyers wrote in a Cook court filing seeking a temporary restraining order. Guys, that is grasping at straws there. What's basically happening here? Like, now keep in mind, right? Public opinion and a court of law, two totally different things. We are in the court of public opinion right now. It is quite obvious that she did this, right? It's obvious she did this. We know millions of people did this. All right, now proving that in court and charging and everything, that's a whole different story. But this is not a good look for Lisa Cook here. Also not a good look is Cook's scrutiny builds after criminal referral over a third mortgage. Oh, there's another one, but who's counting? Oh, my goodness. Federal Housing Finance Agency Director Bill Pulte sent a new criminal referral against Federal Reserve Governor Lisa Cook, intensifying the Trump administration's pressure campaign against the central bank board member over allegations of mortgage fraud. The new referral in a letter to U.S. Attorney General Pam Bondi dated August 28th concerns a third property in Massachusetts and follows a complaint earlier this month alleging that Cook fraudulently listed homes in Michigan and Georgia as her primary residence when she obtained mortgages in 2021. A declaration that typically secures more favorable loans. The latest complaint alleges Cook took out a mortgage agreement on a condo in Cambridge, Massachusetts for $361,000, claiming that the property was a second home. So this isn't a primary residence fraud going on here. She's saying this is a second home, buying it for personal use. Pulte alleges that 8 months later, however, Cook declared that she had earned between $15,000 and $50,000 in rental income and declared it an investment property. If it's an investment property, you have to state that when you take out the loan because they charge a higher interest because that's riskier. Cook's attorneys did not immediately respond to requests for comment. The Federal Reserve declined to comment. Now, guys, it's also worth pointing out, where did Pulte find out that 8 months later she declared that $15,000 to $50,000 in income? If that was on some kind of Federal Reserve required financial disclosures, okay, that's fair game. If he pulled her tax returns, how did he get access to that information? And is the government abusing its power by accessing personal data for political gain? Well, that is an ethical question. That's worth keeping in the back of your mind here, right? I'm not defending Lisa Cook here. I have no doubt that she did this in my mind. That being said, let's not forget, guys, this is lawfare against the Federal Reserve. Even if the Federal Reserve is a loathsome institution, it's still lawfare. This is a second, third, or fourth step down that slippery slope to banana republicanism. And, well, we seem to be going full bore in that direction. All right, let's go through some earnings real quick here. We got Affirm stock soars 15% on earnings and revenue beat. Affirm is ripping this morning. The company swung to profitability. Affirm shares rose 15% in extended trading on Thursday after the provider of buy now, pay later loans reported better than expected earnings and revenue for the fiscal fourth quarter. EPS was 20 cents versus 11% estimated. Revenue, $876 million versus $837 million estimated. Revenue was up 33% in the period from $659 million in the same period a year earlier. Gross merchandise volume rose 43%, yikes, to $10.4 billion from $7.2 billion a year ago. Americans are using buy now, pay later debt like crazy. Affirm reported net income of $69.2 million or 20 cents a share after recording a loss a year earlier. This consistent execution led Affirm to achieve operating income profitability in fourth quarter of 25, right on schedule, as we had committed to a year ago, the company said in its shareholder letter. So really good results from Affirm here. Here's my problem. This is from Affirm's shareholder letter. Let's make this a little bit bigger here. All right. They are showing what their year-over-year comparisons for delinquency is on their monthly installment loans ex Peloton, not counting loans for exercise bikes. This is their 30-day delinquency rate. And you can see here, they are claiming right now delinquency rates of about 2.5%, which have not changed pretty much at all for the last 4 years. And folks, that just does not pass the sniff test. If anything, look, it's showing delinquency rates are actually falling right now. No freaking way. Let's think. We got delinquency rates are rising in autos. Delinquency rates are skyrocketing in student loans. Delinquency rates are rising slowly in mortgages. Delinquency rates are rising in credit cards. And yet they're flat to down on buy now, pay later, which doesn't get reported to your credit bureau, and they can't possibly repossess what you bought with the stuff. I've been saying if there's something at this company stinks, I think they're lying about their delinquencies. I think they're doing it in order to dump this debt into securities and sell it to people's retirement funds. And I think once this credit expansion slows or stops, when that tide goes out, we're going to find out that Affirm was swimming naked. But for now, Affirm stock is ripping on this news this morning, up. Let's see, the opening bell has rung, so let's see what we got there. We're up 15% pre-market. They are now up, oh my God, 24.5% higher, trading at almost $100. This thing is gone vertical this morning. Be careful, guys. Something stinks at this company. We also got earnings from Marvell. The stock is falling as its earnings didn't live up to the AI hype. We're getting a little short on time here, guys, so I'm going to go through this one quick. They were pretty good numbers, solid year-over-year growth, but so much of that growth was already priced in. The market was expecting perfection, and instead the market got just pretty good, and pretty good is less than perfection, and so Marvell stock is down. Wow, they're down big today on what was admittedly a pretty good earnings report, but the stock is down 16.7%. Trading at $64.56. They've had a pretty rough year over at Marvell. This is their second quarter in a row of posting good but not good enough earnings, and the stock is now down 41% on the year. Now we've got another one posting pretty good results but not good enough, and that's Dell this morning. Dell slides after weak margins eclipse upbeat full-year forecast. Pay attention, all you Supermicro and HPE shareholders. Shares of Dell Technologies dropped nearly 6% in pre-market trading on Friday as a dour quarterly profit forecast and weaker than expected second quarter margin rate overshadowed upbeat full-year estimates. Rising demand for servers capable of handling computational needs for AI workloads is benefiting companies such as Dell, Hewlett-Packard Enterprise, and Supermicro, but the high cost of producing them and tough competition have pressured margins. The company forecasts third quarter adjusted profit of $2.45 per share, falling short of analyst estimates of $2.55. Dell expects third quarter revenue to be in a range of $26.5 billion to $27.5 billion. That compares with estimates of $26.05 billion. But it's those compressing margins that are hurting the company. Adjusted gross margin rate for the second quarter fell to 18.7% from a year earlier and missed estimates of 19.6%. So it's a razor thin margins in this business. It's hurting them. Dell, let's see, not doing as bad as Marvell the last I looked, but still down double digits. 10.2% lower for Dell on what was otherwise a very good quarter. Again, the expectation's just too freaking high here. We'll go through some of these last ones pretty quick. Also, Indian rupee falls to a record on worries about U.S. tariff impact. That you get everything you need here from the headline, guys. The Indian currency is being hurt by the loss of exports to the United States. And look, you can see that in this chart. This is USD INR going back to about the beginning of 24. This is the number of rupees you can get for $1. So as you see this chart moving higher, this is the rupee getting weaker. As you see it moving lower, that's the rupee strengthening. And since 2024, the rupee has weakened substantially, and it is now at an all-time low against the dollar. It recently took out the high from the 10th of February, 88.19 rupees to the dollar. Like, let's set this to a weekly candle, and you can kind of get a good idea, guys. Now, look at what this thing has done for the last, 40 years. And keep in mind, this is only measuring the rupee against the U.S. dollar. The U.S. dollar has been losing spending power the whole time. So if you've been holding rupees in a savings account here, you have been just getting clobbered by exchange rates and inflation this whole time. Now imagine you're the Russian government, and because of global sanctions, you've been selling all of your oil or a big chunk of your oil to the Indians for rupees. And since you don't import anything from India, you're sitting on a massive stockpile of rupees, And this is what the value of the rupee is doing. Remember, this is an inverse chart. So this is the rupee going down. This is going to put some pressure on the Russians here. I don't know how much. I don't know if it's enough to get the Russians to like abandon their goals in Ukraine. Historically, the Russians have been willing to accept obscene levels of casualties and damage in order to achieve victory. So betting on winning a war of attrition with the Russians is not exactly a bet I would be willing to take. But it does show here, guys, what's going on in the trade war. It's affecting Canadian GDP, it's affecting the Indian currency, and it will almost certainly be affecting the global oil trade. All right, we got to touch on this. These are otherwise pretty important data points. PCE, this is the Fed's preferred measure of inflation. Let's refresh this chart and see if they updated it. There they go. They did. It came in at 2.6% year over year, the headline number. Normally, we break down the month over month and the core versus headline numbers, but you kind of get the picture here. PCE inflation was flat. A lot of people are expecting higher consumer inflation from the tariffs. We've already seen higher producer inflation from the tariffs, but it has yet to filter through to the consumer. How we know some of it is coming. How much? That's the big question right now. So, we're talking all about the Canadian pain, and we're talking about the Chinese rushing to onshore the chip industry, right? All that is going on in the background. But the big question in the trade war, how much pain for the American consumer, and will the American consumer put up with it? We just don't know. Meanwhile, American consumers are going further into debt. See also the Affirm earnings. We got personal spending for the month of July rose by 0.5% month over month. This came out with the PCE data. All right, we're up 0.5 in spending, but then let's look at our income. That's only up 0.4%, which means that extra 0.1%, that is new debt. Americans just love debt. Man, do we love to borrow at every level. Federal, state, local, personal, college loans, car loans, house loans, buy now, pay later. When does it stop? I don't know, but it ain't today. American consumption continues to be fueled by money we don't have. And last but not least, the trade balance came in. This is basically the U.S. trade deficit, $104 billion for the month of July. That is up rather substantially from the $85 billion that we saw in June, but obviously down substantially from the ridiculous levels we had in the first quarter as people were front-running tariffs. But as you can see here, guys, this is one of the biggest sources of the GDP growth that we saw yesterday in that second estimate of GDP. That came from these three bars here, the lower trade deficit caused after the Liberation Day tariffs were released. But it's also worth pointing out too, guys, that 104 billion, that's kind of in line with where we were at the end of last year. So there really hasn't been any material change in the U.S. trade balance yet because of the tariffs. We've seen a big decline in Canadian exports, but we're not really yet seeing any substantial move towards zero on this trade balance. The U.S. is still a net importer by a huge margin. And I just want to say thank you. Wow, 9 of it. You guys busy this morning. Thank you so much, M&J, for gifting 20 Nobody Special Finance memberships. Thank you, M&J, for supporting the channel. That was wonderful of you. I appreciate that very much. And for everything you do for the channel as well. M&J puts in a lot of work behind the scenes. She's really awesome like that. And to you 20 new melon heads, welcome to the channel, guys. And just a reminder, you guys, you get one free super chat every month with that membership. So feel free to use that, and I will read and respond to your questions or comments live on the air. Thanks again to M&J. You rock. Hey, Grandpa, what's going on, brother? He says Mexico has a new chip that will revolutionize the industry. They are calling it the nacho trip. Yeah, I saw something about that not too long ago, right? I don't know. Buy the dip. That's all I can tell you when it comes to the nacho chip. Buy the dip, Grandpa. Thank you, sir, for the laugh this morning. Appreciate that very much. And, I lost my place. Zeeble Fritz is a new member. What's going on? Hey, Z, thank you so much for supporting the channel. Z is a new melonhead. You've been a member before, Z. I don't think. Maybe he upgraded. I'm not sure. But welcome, Z. Appreciate the support. Spotty has been a melonhead for 4 months, and he says stagflation or inflation likely with a Trump-run Fed. You're right. Either way, we're going to get deflation, right? We know that's coming. Right now, I'm leaning towards stagflation, and Powell kind of alluded to that at Jackson Hole. We've got serious downside risk to the job market. we'll know a little bit better. I think, is it next week or the week after? In the next 2 weeks, we get another non-farm payroll report. It's going to be a big one. It'll be the first one since they fired the BLS head. So, if there's like a sudden leap higher, making the jobs numbers look better, the whole world is going to call BS on that. So it's going to be interesting, the new jobs numbers. And there's going to be, I think, a little bit of skepticism will be warranted in those job numbers. That being said, I'm leaning towards stagflation right now. I really am. I just think unemployment, the risks here. There was a story in the Wall Street Journal today about how employers aren't putting up with workplace activists anymore, how they're firing people who break into offices for protests, whatever the cause du jour is. And the reasoning they provided was that employers now have the upper hand. And, when it comes to labor, it's a buyer's market, not a seller's market. And employers are the buyers of labor. That means weakness in the job market there. So I'm going to go with stagflation. I think we can all agree the dollar is going to continue to lose purchasing power. The question is, will the employment situation improve or get worse? I think it's going to get worse. Thank you, Spotty. Good question, sir. Richard Bell says, will Congress ever step in and do their damn job? I am not willing to bet on that happening, Richard. If you put a gun to my head right now and said Congress does their job or doesn't do their job, I'm going to say doesn't. All right? Let's be honest. Do you see things improving in our legislative body? It's like, have you turned on C-SPAN? We're at 0.5 Jerry Springer right now with where we're at Congress. Anytime you get what was it, Crockett and MTG, Marjorie Taylor Greene, you get them in the same room, you're going full Jerry Springer when that happens. So, the whole legislative body hasn't descended to that ridiculous low, but we're trending in that direction, aren't we? We sure are. So, no, Congress will not do their job. And that just hurts us, Richard. Thank you for the super chat, supporting the channel. Kevin DeBella says, per Bloomberg, Goldman helps World Bank sell $510 million of CLOs. Oh, that's collateralized loan obligations. A lot of commercial real estate debt in there, made of loans to companies in developing countries, because why not? The big point there, Kevin, thank you for that tip. I'm going to look at that story. I'm not so worried about who's selling the CLOs. I want to know who's buying them, and I want to stay the hell away from whoever's buying them. As far as I know, the biggest buyer of CLOs in the world is Norinchukin, one of the big banks in Japan. They have been doubling down on CLOs recently after taking a lot of losses in treasuries and Japanese government bond debt. So thank you for that tip, sir. Again, the big question, who is buying? And I don't know this for sure, but I'm pretty sure the answer, guys, is us, our 401ks, the mutual funds and the ETFs that make up our retirement plans and our pensions. I'm pretty sure that's who's buying this crap. Thank you, Kevin, for supporting the channel, sir. Harmonair LLC says, what if they convert the rupees into Bitcoin, though? Honestly, I'm surprised they haven't been doing that. And I'm really surprised the Russians haven't already just forget the rupees at all, just pay for the oil in Bitcoin. Now, Bitcoin is still pretty volatile, right? If you're paying for oil and then we have a night like we had over the weekend where the price of Bitcoin drops $4,000 in the blink of an eye, well, that throws off the whole trade, right? It's a mess. Now, you can balance that in the futures market. You can play the volatility. I don't know if the Russians would be able to do that easily because they're locked out of SWIFT. There are ways to hedge the volatility, but I think Bitcoin is going there eventually, Harmonair. It's not quite there yet. I wouldn't be surprised to learn that some of that was going on. But I think Bitcoin has a volatility problem that will prevent it from being used en masse for global trade settlement. Now, all that being said, as the world pushes to de-dollarize, I don't think the Russians and the Chinese are going to get together and say, let's issue a gold-backed currency. Oppressive regimes do not give away their power like that. And when you peg your currency to gold, your government is giving away its power. That they're giving away the power to rob their own population through financial repression. And oppressive regimes just don't do that willingly. So I think Bitcoin is really the only thing that is any plausible threat to the dollar as a global reserve or a means of international trade settlement. And even Bitcoin is still a long way off, which means the dollar is not going to go away as the world reserve currency anytime soon. It may continue to slowly lose market share and small pieces to several other currencies, but nothing is going to dethrone it anytime soon. Thank you, Harmonair, for supporting the channel, sir. Steve Woodis says a weak rupee could create Indian demand for gold and silver. India also already has immense demand for gold. It would not surprise me to see their currency weakening. It's probably why the Indians have always had such demand for gold, because you saw that chart when you zoomed out. The rupee has been bleeding to death for 40 or 50 years. So, yeah, I think you're right on the money there, Steve. And silver, historically, Indians have not had a lot of demand for silver. They've had a disproportionate demand for gold. But I did see some stories, it was like 2 months ago or so, that you were starting to see silver demand in India creep up because gold had run so much, and the gold to silver ratio had gone as high as like 105 at one point. So I think, yeah, silver too, to a much lesser extent, but more recently, silver has been included in that bunch there. Thank you, Steve. Good point, sir. P. Nice. What's going on, brother? Thank you for being a melonhead for 12 months. He says, cooked over hist clerical errors. Hist clerical. I like that. A clerical error. Come on. Oh, I mean, that's like, I didn't mean to break the law. Oh, I'm sorry. Yeah, try that. Like, you know, you get audited by the IRS and they find out you've been evading taxes for 20 years. Oh, it was a clerical error. I just forgot to submit the documents. I'm sorry. Definitely wasn't on purpose. And the whole like that, you know, it's a victimless crime. Nobody was harmed. There's no materiality. That's BS. You know, if you secured favorable loan terms by lying, you got those favorable loan terms from freaking somebody. By the way, a lot of those loans are backed by the government. So you could argue she harmed the American taxpayer by doing that. Just saying. Look, she obviously did it, guys. Let's be honest. She obviously did it, but she is being attacked for the wrong reason. What's the right answer here? There are only wrong answers. There's only wrong answers. You can't let lawfare let the president take over the Federal Reserve, and you can't let Federal Reserve governors get away with insider trading and freaking mortgage fraud. So what's the right answer here? There isn't one. We just need higher standards of leadership at every level in government and banking. We need higher standards, and our standards are not moving in a higher direction. Thank you, P. Nice, for supporting the channel. Frank says, Jack, great show today as always. Happy Labor Day. Thank you so much, Frank, for the good vibes and the reminder, guys. No show on Monday. Markets will be closed for Labor Day. Shout out to all the guys who are laboring and don't get the day off on Labor Day, which tends to be the guys who work the hardest, actually, who don't get the day off on Labor Day. So shout out to you guys. Thank you for keeping everything running while the rest of us barbecue. I do appreciate that. And thanks again, Frank, for being a melonhead and for supporting the channel. Zeeble Fritz says, payment declined apparently. Oh, well, that sucks. I'm sorry, Zeeble Fritz, but I appreciate the perseverance. Thank you so much for overcoming that declination. Sometimes no means no, and sometimes no means ask again. What can I say, Z? Appreciate the perseverance, brother, and the good vibes. Thank you for supporting the channel, everybody. And guys, have an awesome long weekend. Spend some time with family. Enjoy yourself. You have earned it. Again, shout out to the guys who don't get the day off. Don't forget the like button and that subscribe button for the algorithm on your way out, should you feel so inclined. Thank you guys for the super chats and supporting the channel, as well as you magnanimous melonheads on YouTube and Patreon. Thank you guys so much for your continued support of the channel. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small, dream big.